markets today. All right. Well, let's take a look at some stuff. Everybody funnels in here. What's going on, everybody? Let me know if my volume is good. Did have a decrease just a little bit. I got some background noise going on in the house, so hopefully it's not like too distracting. I can't hear it really, but hopefully you guys can't hear it too. Anyway, so yeah, I'm just looking at the markets right now, guys. Want to see what's going on. We had a pretty big day today. Markets opened up and did exactly what I thought they were going to do. They filled the CME gaps. If you look at the S&P right here, we had started off the gap yesterday down here. We ran down a little bit right over the weekend, left the gap behind, and we filled it. So right there, that was our CME gap. The S&P 500 has filled. The only level above us right now is the high. So on the daily, any lower highs below 7,000, that's a lower high, is all it is at the end of the day. We had lost, we had to break a structure right here on the daily. So I'm looking for a lower high to get put in, anywhere between here and now. If it starts to break up, that is a different story. I have to flip my tune on this. But for now, I don't know. My gut says that we'll probably got a little bit more. I think this is just pushing up just to mess with people, and I think they're going to run it back down. But we do have a big day. We have the Fed rate decision on Wednesday, so that's going to be a big one. Everyone's going to want to know what Jerome Powell's going to say. We also have a government shutdown looming on Saturday. Just found out about that today, but it's apparently the probabilities are pretty high that it's going to shut down. No, I'm live on YouTube as well. So we have a YouTube channel, Tactical Edge Trading Academy. You can check us out there. But I stream live YouTube and TikTok simultaneously. So do the other guys as well. But yeah, my name's Eddie. I'm a trader at Tactical Edge. We're just a trading group. We have a Discord. We have a website. We do educational content. We stream live. We do live trading. We do mentorship, all that kind of stuff. So if you're interested, check us out. It's free to join. Nothing. There's no upfront costs. And yeah, wouldn't hurt. And if worst case scenario, just give us a follow on TikTok. We do live stuff. If you want to learn more about us, we do lives almost every day of the week. Nick did a live earlier today. I'm doing the late night live. Ben will probably do a live tomorrow night. So just keep an eye out for us. But yeah, this is S&P. Like I'm looking for a lower high here. But look, I'm not in a short yet. And I won't be in a short until the market tells me it's okay to be in a short. And right now, it's not telling me it's okay just yet. So I'm sitting on my hands there. NASDAQ looks pretty much the same. If I had to be honest, like NASDAQ probably looks a little stronger. I mean, we're right back up against the highs right here. We lost this trend over the weekend. We filled that CME gap right here. This is the gap from the weekend. We filled it and we kept it going. So we're looking to see if the S&P is going to do the same. But NASDAQ's looking good, looking strong. Any rejections at this high right here that I just have marked off, it's probably going to result in a rollover and a bigger move down. So got to keep that one in mind. Let's talk about the commodities, man. How can you be in the markets right now and not paying attention to the commodities? Gold, silver, copper, platinum, they're all just running straight up. They're all just, I mean, just look at so this is gold. Gold's just been in an uptrend for quite a bit of time. Even since it's broke 3,000, it's been in an uptrend. But like way back here from, gotta go back down to the weekly. I mean, we started this rally technically in 2015, but it really kicked off in January when we broke 2,000 and ran up. And we've just been in like pretty much an uptrend. There's been no, I mean, there's been pullbacks, but nothing worth writing home to about. We had broken this high right here around 4,400, and we pretty much was a straight line to fit 5,000. So we had a nice little play on gold. We had talked about last night if anybody tuned in, right? So this was the play. We had a CME gap, all right? Here was the gap put in over the weekend, right there. We ran up over the weekend, and I said, hey, look, if we get any topping signals, I'm looking for a pullback to fill the gap and then possibly a continuation from there, just like it did before. Well, sure enough, today we got a pullback. Nice little pullback on it. So we had originally lost VWAP today around like 1 o'clock, right? When we lost VWAP, we got a small little back test. You can see this back test right here. Boom. It was like a little head and shoulders pattern on the 5. We back tested it, and then we ran down to ultimately fill the CME gap, and then we rallied out of that pretty quickly. Right now, gold is forming a little bit of an inverse head and shoulders. So look, it's filled its CME gap. It's got the inverse head and shoulders on the lower time frame. So it looks like it's poised for another move back up. I think it wants to go attack the all-time highs again. If it's anything like the CME gap we had last week, I mean, it pretty much just went down, filled the gap. There's a gap back down here. We filled it, and we ran up. So that's pretty much what gold has done. So I don't think there's any reason to start fading gold and silver just yet. I think they're still continuing their uptrends. Silver, I mean, look at this run up today we had on silver. Let me get rid of the VWAP real quick here. That's on Wednesday. It's not tomorrow. It'll be Wednesday. So keep an eye out about Wednesday. But yeah, that's going to be a volatile day. I think there's going to be volatility in the markets, both directions. It's usually a day I like to sit on the sidelines. I don't like to go in with an open trade on that day because you never know how the market's going to react. It's open reins for the market makers to pretty much just run it up, run it down, get everybody off sides. But look, silver, it's been uptrending. We ripped up. We came back down. We had a small CME gap over the weekend right here. You can see it. We filled it pretty much, and now we're running back up. So I want to keep seeing this. As long as silver is on this uptrend and continuing, there's no real reason that's going to stop. The high that we topped out was just about 118 today, so that was a pretty good high. At one point, silver, I think silver was up like 12% today at one point. So there was going to be a sell-off at some point. So we'll continue to monitor this. I am not long on silver. I am not short on silver. I'm just kind of chilling, watching it. You can see, like, we've just been... If you're shorting this thing, you're really doing yourself a disservice because the trend's up. And it's a lot easier just to long this thing than to try to catch a short. It's just how I see it. But copper, gave this play about a week ago. We talked about copper. I said, hey, keep an eye on copper. Copper's been in an uptrend for quite a bit of time since November, right? Just a local uptrend. It's been uptrending way longer than that. But the big thing I noticed on copper was this. The money flow looks good on Market Cipher, right? But this is really what I saw. Momentum shifting down as price is moving up. That's a hidden bullish divergence, and we're bouncing off a trend. And we got a reaction there on copper. So anybody who took this play, congrats. I mean, I gave it in the Discord. I talked about it on the lives a few times. It wasn't anything crazy, but look, I mean, it had an easy trend. You broke out, you retested, and you ran up. It wasn't like... It's a catch-up play at the end of the day. Like, it's catching up to gold and silver. I mean, it was a 4% move. So really what we're looking here for, like what I'm looking for on copper is one of two things. It's consolidating right now. It's got a trend underneath, and we have a little bit of a trend coming to the downside, right? So what I want to see is I want to see copper either hold support and continue to attack this high until it eventually breaks through, or it's going to roll over. Like those are the two, that's like pretty much the two resolutions I'm looking for on this thing. So, but I'm a little bit more inclined to think it's going to run up because of gold and silver and the rest of the commodities. So why start fading copper if everything else has been running up? And you can see back here on silver, I'll actually show you where I'm talking about. Silver was doing something very similar a while back. So look at this trend here. Silver got pretty tight on this trend, right? So we had this long trend, and then silver started to actually consolidate, kind of like copper's doing now, right? And eventually it broke up. So, yeah, I mean, I think that we may be just following in the footsteps of silver and gold with copper. So we'll keep an eye on that one. I wouldn't go fading it, but like I said, if you start losing this macro trend, then you have a short starting to brew. I wouldn't short it right off the rip, but I would look for a lower high to form and then a back test, and then probably take the short from there. But I'm more leaning towards a move upwards, but I think it's going to chop around here for a little bit, consolidate, and build up some steam for its next move if it is going to continue up. So we'll keep an eye on that. I mean, the volume looks good. Volumes just continue to trend up. I mean, look at the daily. The volume's trending up. Can't fade the volume. So there's no real reasons to get too bearish on metals. Yeah, I can look at iron. Absolutely. Give me a second. Let's go take a look at iron. See what's going on with it. I was actually looking at that earlier today, and it was doing okay. All right, so iron. We talked about iron before, so we had a little bit of an inverse head and shoulders breaking out, and we talked about this golden pocket. Why does this level matter? Because look, it looks like we put a significant high in. High, higher high, we had a low, and we broke that low. So right now, on the daily, I'm looking for like a bearish retest. My mind just thinks, hey, if it's starting to break down, let's look for lower highs. So if you go down to like a lower time frame, you can see it's kind of running up on this trend here. It's shifted a little bit, but so you got like a little bit of a trend there, and kind of like a trend that's kind of breaking right now. It's not the cleanest. I'm gonna get rid of that real quick. So look, we're consolidating. The key is $49.50. We need to hold above it. So as long as we're chopping here, there's still room to go up. Where I start to get a little more defensive on iron is when we start to get into this golden pocket here. This is 618 and that's the 786. I'll even label it golden pocket so we know what we're talking about. So if we're going to put a lower high in, it's going to happen somewhere in the zone for a bigger move down. Now, if it just blasts through here and goes for the all-time high, you know, my entire thesis on this is invalidated. So don't get me wrong. I could be wrong on this, but like this is kind of what I'm watching for on iron. It just has the makings of like it may want to pull back. This looks like a macro high. We lost a major level. If you go down to the, like I said, you go to the daily, like that's a daily low we lost. And sure, we reclaimed it, but you can see like it's just not it doesn't have the steam there just yet. And you can see volumes been slowly trending down. So until we start seeing volumes start to tick up and we start to see some levels getting broke, I'm looking for lower highs on iron. And that could prove me wrong, but we have to wait and see. I mean, the daily's overcooked on the momentum. So, like, you can see, like, it looks like it's waiting for a breakdown, but it has to get to where it's got to go first. That's just where I'm seeing. And, look at the money flow. I'm just going to show you what market cipher looks like on the daily. The money flow has been coming out. So, like, it lines up with the lower volume. It just, everything lines up that this thing may put in a lower high and come back down. Now, if it were to break down, I mean, obviously, I'll be watching this $49 level. If we lost this level, I would imagine we're coming back down to 34, 33, 34. And if this thing actually broke down, probably a lot lower than that. The next major low is not till like 25, 26, and then we get down to 20. So, but hey, we don't know. We'll see what happens. We'll keep an eye on this one. For now, there's no real higher time frame plays on iron. What I would say is to watch on the lower time frames, watch this little range we're forming. So between 49 and about 59, see how we're kind of just forming a little bit of a range, chopping around. All right, that could break either direction, but just watch it. If it starts to break to the upside, you start to get into that golden pocket area. It could be a place to start looking for divergences for shorts. If you're bullish, you'll be looking for longs down here at support, or possibly even this trend. You could look for longs if you're bullish. If you're bearish, you're looking for sweeps up here. And if it does break above the golden pocket, then you're looking for the all-time high. See what happens up there. It could 100% go up there. But like, look, I mean, it just looks like a bear flag, really. Like, it's not perfect, but it's there. It's like we're almost flagging out a little bit. So until I see something that proves otherwise, I'm not going to get too crazy on this one. But hey, I mean, volume on the lower time frames is a little bit better than the higher time frame. Higher time frames look a little bit weaker. But if this thing could start to break out, like this is a flag, and this thing starts to pop through volume, that may be an early indicator that, hey, we're going to run up a little bit more. Like, you know, if it starts doing stuff like that, breaking highs, then maybe we can talk about a, you know, potential bullish move on iron. But for now, just watch this range. If you really want to get really into the nitty gritty of it, right, you can even pull a, let me get rid of this. So you can even pull a fixed range volume profile on this little range we're in. And you pull it back from here. And you can see where we're sitting in the range, right? So we're sitting right above value area low. We got POC, that's point of control, area where the price is traded the most. And then the value area high sits around 56. So as long as we could hold the value area low, which is around that 51, 52 area, and we don't really deviate too much below that, you know, you expect to make a move back up to these highs. Maybe higher. So it's kind of what I'm seeing there. SNDK. Yeah, I could take a look at that. What is SNDK? I think I know this one. SanDisk. Okay. I mean, do I have TA on this? Don't look like it. Let's get rid of volume first. Let's go to the daily. So this thing is broken out. Man, look at that trend, right? So this is coming back from August 25. We had an uptrend. We had a little bit of a consolidation. Breakout again, right? Just a little bit of a flag. Breakout, retest right there, and then another pump. So it's really, look, it's tough with this thing because it's been in price discovery for quite a bit. You do have a big date coming up at the end of this month, right? So you got to keep an eye on the 29th of January. That is Friday? Is that Friday? Yeah, that's Friday. So you got to keep an eye on Friday. There's going to be earnings coming out, and earnings usually can be a big mover for the markets, especially individual stocks. Now, on a lower time frame, what I would be watching is this trend here. So you could take a line from right here, run this straight up. You see how we have a trend line on the 4-hour? That's going to be your immediate support. Because we're pumping the way we're pumping, it's really hard to find horizontal supports, and you always get the big pullbacks. A lot of times the trends will... Is that Thursday? Yeah, you might be right. Yeah, Thursday. So you don't always get those big pumps, right? I mean, you don't always get those big pullbacks, but on these big pumps. So you look for the trend. Trend's usually going to be your friend until it's not. So an early sign of a breakdown will be a loss of this 4-hour trend, and that would probably signal a bigger move down. Now, where could it go if it was gonna drop? Well, the first place I'd be looking would be the previous high. That's the big level I'd be watching, because you see, we really never got a back test of this breakout, right? And you can see how the liquidity stacked, like liquidity. This is lows that haven't been retested or swept. So they're stacking liquidity here. So if we start to lose this trend, I could see this coming down pretty quickly. So, but for now, the trend is up. You got a 4-hour trend to monitor. Let me see if there's any divergences. I mean, the daily's definitely overcooked. Like, look how long it's been up here in this oversold area. The 4 hours starting to bottom out a little bit. Hasn't given any bearish divergence just yet on the 4-hour. You can see a little bit more bearishness on the 1-hour. But it started back here, really. So what I would do is just watch this level right here. Watch that trend I talked about on the lower end, and then watch this higher trend. And watch price. Price could just be flagging out, right? This could just be a bull flag that wants to move up. And if you take a measured move... I mean, if this thing broke, maybe it goes up to $600. That could be the next level. I mean, it pierced 500. Maybe it's going to make its way up there. So those are the two directions. I mean, it's the two plays I can really see for the most on SNDK, SanDisk. But right now, it's just watching. And you look, you got earnings coming up. So be careful. Just be careful going into an earnings. You never know what's going to happen. It could go either way. You know, they could reverse it. I got a couple other to look at. So somebody asked for Path. Then I got IBRX, and then I can go look at, well, somebody asked for Path twice. Okay. So trading is basically understanding breaker structure. I mean, market structure is like pretty much the fundamentals. If you don't understand market structure, you're missing out on like one of the key fundamentals of trading. What I would recommend is learning it, Yeah, it is tough, but look, that's how you break it down, man. You got to go to the higher time frames, get those levels, and you go down to the lower time frames so you can find something that makes sense. And if it doesn't make sense, it doesn't make sense. You just don't TA it. But I mean, this line makes sense, and if we lose this, there's probably going to be a drop. But yeah, market structure is important. It's very important. And if you don't understand it, like, join our Discord. We'll teach you. There's a bunch of educational content on it. Nick does a great job at talking about market structure and really breaking it down to like a beginner level for someone who doesn't understand it at all. Me, I don't know. I have a problem teaching sometimes. Sometimes I like forget that, you know, some things aren't as obvious. So if there's ever a question, feel free to ask in the chat. If like something I'd say I didn't explain well. I could see it hit 600, but now slowed down, make me worry about how much pullback. Yeah. I mean, look, just you got this trend, man. Put an alert. That's the beautiful thing about these trend lines, dude. You can click on it, right? If you're not familiar with Market Cipher, you click on it, right? And it'll give you this little thing right here. And you can click on this little, like, alarm clock, and you can actually set an alert. So when it crosses that trend, it'll tell you. You can create an alert. I'll create an alert myself. So, yeah, dude, like, that's gold. If you haven't done that, if you haven't figured that out about markets, not Market Cipher, TradingView, I mean, that's like one of the best things you can talk about. Is how to set alerts and stuff. I mean, it's basic stuff, but it makes a lot of sense, and a lot of people overlook it. A lot of people will overlook it. So Path, and we're talking about UiPath. Is it the same one? PATH. Okay. Wow, man, look at the gaps here. So the first thing I noticed is this thing likes to move. Why? Look how fast it moves up. And, you know, it moves down like in both directions, and it leaves behind these big CME gaps. Like this gap right here, this is a CME gap it left behind, and we filled it, right? So this is basically means that we closed on a Friday up here, or whenever the market closed. It's saying May 2024. Was it a holiday weekend? Could have been a holiday weekend. But anyway, we left this big CME gap, and over time, what do? We filled the gap. We came back up to fill it and fill that inefficiency. So, getting more into CME gaps than I've been ever talking about them before. But look, on this most recent pump, we left the gap behind, right? Right there. And I haven't marked off as gap. What do? We bounced off it as support. Very important to notice this kind of stuff, though. This is a good educational moment. If you're trading CME gaps, a lot of times when price action approaches them, it treats it as resistance or support, depending on what direction you're headed into it. They protect these gaps just like support or resistance. So traders don't, like, you know, the people put limit orders here to short and take profits here, and then they what they do is they trigger those orders and then they run it up to stop them out before actually taking the gap. They get the front runners is basically what they do. But look, we filled that gap. So what we need to see is this going to be the point where we bounce, or do we continue down? If I'm looking at it on just the daily, right, I run a little bit of a trend line here. We did front run this trend just a little bit. So there is a potential it could come down a little bit further. If I'm looking at my fibs here on Path, we're right on the 786, man. We tapped the 786 perfectly, right? We didn't get much traction on that 618, but that 786 is holding. So I think this $14 level, this low that we're at, is going to serve as decent support for the time being, right? So if we do pull back, this will be my first support. So maybe we do something like this, right? Maybe we chop around, we get a little pullback, and if we're going to take off, we're going to take off maybe from another sweep of the low, maybe a potential bounce here. It could also form a higher low and run up from here. We don't know. We won't know until price action kind of does what it's doing. I'm just playing with ideas. At the end of the day, none of this is stuff you should trade off of, just levels to mark, ideas to kind of get your mind going, thinking like a trader. You got this downtrend here, right? So we're starting to build a little bit of context on what could happen here. And this is just a downwards channel. So it's going to do one of two things. It's going to break down from this trend and run down further, or it's going to catch some support at this 786, which is like our last bit of hope. Whether it does it here or whether it does double bottoms, does a sweep. But these are the levels to watch. Now look, if we can, let's say this scenario happens here. We do get like a retrace. We get a bounce, and we start to like bang our heads against this thing, right? And we can break through the trend and back test. That would be a great opportunity to go long here, because if this thing breaks, because of the market structure, right? Let's go to the higher time frames. Let's just talk about market structure. You have a low, you have a high, you have a higher low, higher high, higher low, higher high, potentially higher low. The trend is still up. So if you put in another higher low, based off what we've seen in the past with this asset, what do you think would happen next? The most likely outcome is to put in a new higher high, or at least attack this high here that it last put in. So these are the levels I'd be watching to the upside. I mean, you got that $20 level is going to be a major level, but here's the trend. You can get back above that trend and start forming market structure to, to the upside. You have a potential of attacking that $20 and higher. Now, if you break that 20, what would be the next level? Well, just look to the left. Right here around 21, you got a little bit of a resistance there on the daily. That's probably going to serve as some type of high. It would actually kind of make sense too, right? Because look, from this low here, right here, if you just draw like a little trend line, like you see how we're bounce. If we were to run all the way up, well, it probably wouldn't happen in that speed, but let's say we ran up from here, right? Somewhere into this level, it would make sense. Put a new high in right around there. Lines up with the way the trajectory of the highs that we've been putting in. Again, this is all just theory, but it's what I'm saying right now. So we want to hold this $14 low, and you want to watch this downtrend. If you can break back above this trend and hold that low, then you have a good chance of going back up to 20 bucks. And then we'll see what happens after that. But again, the gap has been filled, so this is a decision point. It's like, does it have more business above to take care of, or does it want to run down a little bit? And we've been running down, so I mean, I wouldn't get too bearish here. We're at support, but that's path. Like, what about Forex though? Like, that's bad to trade. What about Forex? I mean, look, you can trade Forex. The reason I'm not huge on Forex, and this is just me, I don't really like to follow the fundamentals of countries. Like, if you're going to trade the Japanese, let's say you're going to trade JPY USDT or USD, so the pairing of Japan and United States currency, you need to know what's happening over there with their monetary policy. You need to understand what's happening here. You need to be on, like, if there's news about war, it's going to affect the money. Like, that's what happens. Like, like the DXY has been going down because a lot of people worried about the credit crisis in the United States, and worried about our economy kind of slipping. That's why you're seeing commodities like gold, silver kind of skyrocket, because people are unsure. I'm sorry, I was talking to a dude. Fair enough. But yeah, I mean, it's tough, man. They're tradable. Like, look, let me go look at JPY USD. So, like, this is a Forex pairing a lot of people are talking about. And it follows TA. Like, look, we hit a low, a major weekly low. Right here. We swept that low. And now we're getting a bounce. We hit the support. We took that liquidity underneath. And now we're starting to bounce. We're starting to break highs. It runs normally just like anything else. Like, if you go even further back on this, right? Like, look, it breaks down just like bear flags. You get bear flags just like in any other asset. It breaks down, it runs the course. So this thing trades just like anything else. All Forex pairings do. There's just a little bit more nuance. You have to have a little bit more understanding of the country you're trading, the pairing you're trading, the global economical events that it could happen. You have to understand those, because they will swing a currency very quickly. Yeah, I can check that out. I did have one more before Aeva that I have to check. Let me just go back into the chat, see what I'm looking at. So I did Path. Do you like any quantum computing companies? I don't really know too many quantum computing companies. There's some guys in our Discord that know a couple ones that are good. You might have a better time having a conversation with them about it. I'm kind of all over the place, man. IBRX, then I'm going to go look at Aeva. So IBRX, whew, kind of beaten down, right? All right, so I'm just going to draw this out right here. So we're in a range. You see the range? That's our range. Range high sits around 10 bucks. The range low, I probably drew it a little bit lower than it should have been. Range low is about $1.20. It's a pretty big range. Every time you get above this $10 area, you spike up. Like, we spiked up once to 15, came back tested, and ran it up to like 44. And you can see here, when we lost support at $10, we ran back into the range, ran it back down to the bottom. So right now, we're coming off the bottom. I would be watching the range high around 10 bucks at some point. I think we'll probably get up there. Now, if I'm looking more locally, right, on the daily, let's say locally, but we're just looking at the weekly, we did leave some stuff behind, right? So we filled this CME gap right here. Gap filled, right? So we don't have to worry about that gap, but we did leave back a gap down here at about $4, between 4 and 4.50. So that's a potential area for a pullback they could run back to. Does it line up with anything? It does, right? Let's look at the highs right here, right? See, and look how it does it. Like here, I want to point out something. If you want to know how an asset's going to behave, just look at its history. Look at how it does, like how it's reacted in the past. We had a CME gap in the past right here. What did price do? It went up and filled it. It didn't fill it all the way on the first push, but eventually it did come up and complete the CME gap. So it does like to come back and grab those gaps. Like right here, look. We had a CME gap, and what did we do? We basically gapped down below it, but we filled it right here. And we filled it, and then we gapped down, came back up, filled all the inefficiencies. So we're leaving some stuff behind that could be breadcrumbs for us to potentially come back and retest, right? So that's the way I like to look at these things. Fair value gaps, CME gaps, all that kind of stuff. They're just areas for us of interest in case we do pull back to watch. The next place I would go look at, I would pull a fib. Now, that is confluence for me. I see a 618 around 440. Guess what else is at 440? The top of the CME gap. So if this pullback continues, this is an area I would like to see hold. This is an area I can expect some type of reaction because there's a 618 and there's a CME gap. There's a lot of reason for price to come back here, and there's also going to be a lot of eyes on it because a lot of people watch CME gaps and a lot of people trade the 618 Fibonacci's. So you're going to have people watching those levels. And I'm sure if you ran some other stuff, you might find some more confluence. So we got an anchored VWAP coming up. I probably wouldn't even use that right now, or it's probably what we're bouncing off of. But go down to your 4 hour. Let's look at the structure, right? Have we lost the 4 hour yet? Well, we had a high, we had a low, a lower high, and we lost that low. So we have a 4 hour structure break. That is a market structure shift. All right? Boom, boom, boom. When we lost this right there, that was the market structure shift. So right now, we're in a downtrend on the 4 hour. That's the way you need to think of this. So what you do is I usually just start running trends down. I'll usually try to pick a point and see what works. I'd probably go with this a little bit more for now. So you got a little bit of a downtrend. Go down to the hourly, you can see if this makes sense. A little bit. Not great, but we'll have to wait to see if there's any more points of contact. But for now, we got 2 points of contact. It's not a full trend yet, but it's something we can start monitoring in the short term. The next area you want to watch on IBRX is this low right here. See what happens at this low around 572. I have a feeling that this is coming down to attack that low because it's the only low on the 4 hour or the 1 hour or any time frames you look at, really, of any meaning. That's the next area of support. So I would watch this 572, see if we get a reaction there. If we start losing that, I would probably say it's very certain, like more probable that we're going to come down and fill the gap before a bounce. So just watch this level. Watch that trend I just threw out there. They'll give you early signs of whether we're going to run up. I mean, look, see this high right here? I can guarantee there's some divergence in there. Probably some bearish divergence. You can see it right here, look. You can just tell by the way the highs are formed a lot of times that they're going to form some type of bearish divergence. So see how momentum shifted down? See how we wicked up and then wicked up just high enough to sweep that high? Well, look what momentum's doing the entire time. Momentum's just fading as the price is going up. So that's a bearish divergence. So that's telling us that's a significant high on the 4 hour. And then we got the market structure shift. So for now, the trend is down on the short term here. Keep an eye on this. Keep an eye on that 575, 572. And then if you lose that level, you're looking down to 440. Now, if you can break this high, let's say we do flag out, right? Let's say this just finds support somewhere. Let's say this is where it wants to go, and it starts to flip structure and starts to mark up. Well, you got the high around $8, and then you have the high at 10. Those are your 2 levels to the upside that you really want to keep an eye on. Everything else is just kind of like noise, in my opinion, on this. I mean, unless you're trading on a fucking, like, you're scalping on like a 10, 15 minute, like, you know what I mean? Everything else is noise. So those are the levels you want to kind of keep an eye on this IBRX. Can you match it with volume to help discover direction? Absolutely. I mean, look, if volume is fading, you need volume to move up, but you don't need volume to move down. An asset can move down in price without having high volume, but it can also have volume to the downside, selling pressure. But in order for an asset to move up, you need volume. So if volume is coming down, like let's say on the 1 hour right here, you see volume coming down. We topped out here. That was the original top. Then we put in a lower high on volume. They got a volume divergence. That's telling me that this asset on the short term is in the downtrend. People are selling. There's more pressure to the downside. So volume can be an early indicator. Your higher time frames look good, but you can see there is a pullback happening. But, it may just be a temporary pullback because the lower time frames are showing it more. It hasn't really rolled into the higher time frames yet, so you still have a little bit of leadway. Who could have called UNH? It's getting wrecked after hours because of a news article. What happened with UNH? We'll check that out in a minute, by the way. Is Bitcoin bad to trade for beginners? Yes and no. It depends. If you have a system that thrives on volatility, thrives on an asset like Bitcoin that can move 2-3% in a day, sometimes more, and you can control your emotions, and no, it's not a bad thing. But if you're brand new to trading and you don't have a strategy and you're just trying to learn, get your feet wet, you're probably going to struggle a little bit more with Bitcoin than you would struggle with something like the S&P, something with a little bit more volume, more traders, because they're less volatile at the end of the day. And volatility is a trader's friend, but it can also make trading more difficult if it's uncontrolled volatility. So yes and no. Somebody asked for Aeva. Let me go look at that real quick. By the way, guys, if you're not following, give us a follow on TikTok. We do lives almost every day of the week. If you're interested in joining a trading community, check out our Discord. If you're interested in education, free education, check out our website, tacticaledgetraders.com. Links are in the bio. Everything's, like I said, we have a bunch of free content for people. Especially if you're new, you'll get loads of, man. It's unbelievable how much alpha is in our free content. Especially if you're new to trading. If you're more experienced, you might get some tidbits here and there, learn some things you didn't know. But for someone who knows absolutely nothing, it's like, can't ask for more than that. So Aeva, what I'm seeing right here is look, we topped out, bull breakdown, bear flag. All right, a little bear flag right there, then another breakdown. And now we're starting to bear flag out again. The one thing I will say that doesn't really make it too like convincing yet, that it wants to actually mark up, we SFP'd the high here, right? Let me get rid of everything else. We took the high and we closed back under. If I go down to the 4 hour, you see that high it took? That's an SFP. That's a swing failure. That's a grab of liquidity. We came back under and we closed. We failed to break back out from that level. And now we're starting to mark down. So our support is right where we're at now. We're kind of coming into. You can see we have a little bit of a trend, right? As long as we can stay above this trend, I think, we got another shot to come back up here and try to crack this high. But if we start slipping this trend, then you have to imagine that this is just a bear flag breaking down. And then its next target's probably going to be the low around 850 and then potentially even down to like $6. Like that's the next major area. If you just take like this previous range we broke out of, that could be a target end of the day. They could come back down here and retest that level. It happens. So you just got to keep an eye on that one. Keep an eye on this trend. And to the upside, like I said, you have this level here, but I don't like the way that it took the liquidity. Now, the one thing I will say that's kind of the saving grace, you have a CME gap right here. See that CME gap? We're filling that. So as long as it's filling the CME gap, there's a potential it could find some support and run back up. Maybe this is all it's coming for. We won't know until it fills it. But the one thing I don't like is that the CME gap would, if it filled fully, it would break the trend. So that would be a tricky area for me to want to go long. But, hey, we just watch it until I see what happens. We don't have to take the trade right off off a break. You wait for a reaction. That's the beauty of it. You got a little bit of a downtrend kind of forming from the highs right there. So you got something to work with here, right? You got a little bit of like you got a little bit of like price action. So watching the CME gap down to around 1340, 1350. and you got this trend that's coming down from the highs that you can watch. Everything in between these two levels, I wouldn't care about as a trader. I would more just be focused on seeing if we get a bounce, see if price flips, and then we can take this trend, and then maybe we have a shot at coming back up. And to the inverse, if we start to break this gap, fill this gap, lose the trend, and unable to reclaim it, then hey, that's what's probably going to end up happening. We're probably going to get a bigger move down. So that's kind of what I'm seeing on Aeva. Right now, I wouldn't get too bearish on the, like, look, you're almost through the gap. To enter a short right now would be kind of dumb because you're shorting into support. Wait for a breakdown first, wait for a loss of that trend, failure to reclaim it, and then you can look for a short. And for the longs, I mean, you're in the area you want to start looking for bounces, but I don't think it's there just yet. Wait for some market structure to form on the lower time frames at least. I mean, like a 15-minute market structure shift at minimum, but really you want to look for like the 1 hour and the 4 hour to shift. So until you start to see the 1 hour and a 4 hour shift, I wouldn't really get too crazy on longs here. But yeah, I mean, you're in an interesting spot. This 14 to like down to 1350. Those are interesting levels. You want to see if those hold. I have a stock. I'm down 30%. Was going to exit at the moment. I'm just hoping. That sucks, dude. I'm sorry to hear that. I can tell you right now, man. I've been there with the drawdowns. The one thing is, if you got to learn how to play stop losses, even on like stocks. Even if there's no leverage involved and you're just buying and selling, you have to have cutoff points. You never want to let your account or like let a single asset draw down 30%. I mean, unless you're holding it for the long term. But think about it like this. If you would have let it draw down 5%, cut the trade, right, and then just wait it till lower, you could have bought it 25% lower instead of drawing it down 30% and then losing all that money. So it's just kind of like a mindset shift you have to figure out for yourself as an investor. A lot of people are okay in the beginning saying, hey, I'm going to hold through a drawdown, and then what happens? Their drawdown hits, and they're like, I wish I would have sold because I could have just bought it cheaper. UNH. Whew. Look at that. All right. So I'm going. So this hasn't printed on the daily yet, so we're going to look at the 4 hour. But this is a flag breaking down, man. This is a bear flag right here. Right? Look how clean that bear flag is. Even a falling wedge, bear flag, whatever you want to call this, right? And it's breaking down. We lost the low on the 4 hour. If I take the measured move, I mean, yeah, this thing's looking a little bearish. If you take the measured move, where does that take us? So that's like the flagpole. Will take us almost back down to this low here. Right around here. Now look what we have to the downside of areas of interest. Now I'm looking at the daily, right? We have a CME gap right there. That could be a target to the downside. Kind of almost lines up with the full fill, right? The full measured move. So it's really hard for me. Let me get through this one. I'll try to explain a little bit in short terms of how the best way I can explain that market structure and breaker structure. I do see your question, and I'm going to get into that. What levels are those? What do you mean? On this? I mean, the bottom of the gap is around 273 if you can't see it for some reason, and the top of the gap is around 292. So that's the level there. I know I've having some trouble with my numbers getting cut off, depending on if you're on TikTok or not. Sometimes it zooms when you open up your phone, and it ends up cutting out half the numbers. So, but yeah, I mean, that would be a nice place to visit. Look, you got liquidity right here around 294, 292. You have a low, and it just lines up at the top of the gap. So I could see this thing making its way down here at some point. You know, maybe it comes back up, retests, and then makes a bigger move down, get initial bounce before it fills. You know what I mean? They'll fake out before they run it all the way through. But yeah, I think it's more bearish than bullish right now. So I'd be watching around 292 to 300 to see what happens at those lows. And if we lose those levels, you could be coming down as low as 272 to fill that gap. And if it fills the gap and keeps running, I mean, hey, then what's to say we don't go all the way down to this low around 240, 237? But inversely, if you can find some type of support here, I mean, you left some stuff up to the upside too. Like, look, you left the gap right here, up around 500. We're far away from that right now. But you're getting close to this higher time frame trend. Let me go to the monthly so you can see what I'm talking about. So look at this higher time frame trend. Like, you're getting down towards that trend. So maybe it does come down here, sweeps the low, bounces off the trend, and then gets a bigger move up. But I mean, the volume is spiking on the higher time frames. But on the lower time frames, it's down. So like weekly, I mean, more downsides more likely in my opinion. Maybe on the higher time frames, like the monthly, you might have a chance for a bigger move up. This looks like an aftermarket move too. So this happened aftermarket. So this will be interesting to see how this opens up tomorrow. It's probably going to leave a nice little gap too. It's down to 320. Yeah, that's what I'm seeing right now around 320. Because when I look at the daily's still showing it where it closed around 350, 351. It dropped $30, 10% overnight. That's insane, man. Yeah, this will be an interesting one, but I'd say downside more likely. What else? They are so... I have no idea what you're talking about. All right, so look. Market structure. I'll do a quick little market structure lesson. When price is moving up, right? Let's say we're on a 4-hour. That right there. When you break that high, that's a break of structure. Every time you break a new high or break a low, going in a direction, that's a break of structure. Now, that is just an early warning sign of, hey, pay attention. Where you really get bullish, if you're in an uptrend, is you look for the market structure shift. So what happens right here when you're creating an uptrend? You put in a low, you put in a swing high, you put in a higher low. When you break that previous swing high, which is this right here, that is what we call a market structure shift. So you need a low, a high, a higher low, and you need to break that previous high to shift structure. That's an MSS, market structure shift. Now, normally, when you get that, that is in confirmation of an uptrend, but you still have one more piece left. You still have to wait for that back test. Sometimes some people call it the mitigation. It's the back test. This is where most traders will go bullish. When I say go bullish, like take a long. So, like, this is where you would plot a long. You would pop your stop underneath the previous low, and then you would target wherever the target is, right? So that's kind of market structure in the nutshell. If you want to learn more about market structure, what you can do is check out the website. There's some courses on that. They're free. And then check out our Discord. It's free. We got tons of content. There's a learning library, tons of stuff on market structure that really break it down for you. And then just tune in and listen in. We talk about it all the time. I'm always talking about market structure. So is Dunk. So is Ben. I mean, we all live and die by market structure end of the day. But yeah, that's just kind of a quick little tutorial on market structure and breaker structure, what the differences are. Market structure is kind of like the, hey, it's time to, like, breaker structures are just like a, hey, pay attention. Market structure is like, get ready type of deal. Like, get ready for a change, like a bigger move. I'm watching gold here real quick. I want to see what happens. Looks like it's failing. I was looking to see if we were going to make our move back up here, but it looks like it's starting to fail early and might want to come back down and retest this trend. I appreciate that, Marcos. I try to explain it like I'm explaining it to someone who knows nothing about trading, and if I can do that well, then I am good at what I do. Like, if you truly understand something, you should be able to explain it to someone who knows almost nothing about it. Doesn't matter if it's a solid candle. What if it goes higher but wick only multiple? So wicks are a whole different thing. You have to be able to read them. Those are circumstantial. You need, like, look, if you're going to get a break on market structure, wicks to me don't count so much. It depends on the time frame. So if you're looking for a 4-hour market structure shift and you get a wick up, like say you get this, all right, but then it closes back under, that's not a shift, all right? That's a failed breakout. So you have to just be mindful of like wicks and stuff like that. You usually want to see the body close. If you're looking for a market structure shift on the 4-hour, you want to see a 4-hour candle close above that previous high. And if you're looking for a 15-minute, you want to look for a 15-minute shift. Like, it's all time-based and it's all situational based. So you have to kind of like, there is a little bit of discretion because like you can read the charts different than the next person. But whatever you do, you need to be consistent about it. If you're counting wicks, then make sure you always count wicks. If you're just focusing on body closes, then do that. But whatever you do, do it consistently, because no matter how you do it, as long as you're consistent and you have a strategy and you stick to your strategy and your rules, the consistency will show in your P&L. Best way I can probably put that. Trump. I just saw Trump in there. I'm not even sure what you guys are talking about. UNH. Did I look at UNH already? I think I did. Pretty sure I looked at UNH. Yeah, I did. What else you guys want to look at? So, trading highs and lows. So, I know a lot of traders. You always assume that the body matter, but I always want to know. Yeah, it's just about consistency, man. Some people like to do wicks. Some people like to do bodies. You just have to figure out what works for you and just stick with it and don't change it. Like, that's the best advice I can give you there. Because neither one of them is right. I mean, it's all about how you see the charts. But, I mean, there's a textbook way to do things, but it might differ from the next textbook. So someone was asking me about strategies or preferences about trading highs and lows. I think the most important thing you can do is think about it like this. The higher the time frame you're on, the more significant a high and a low is going to have. So like if you're on a daily high or a daily low is going to have more significance than a 15-minute high or low. So if you want to just trade that, stick to higher time frames. If you're just going to trade highs and lows, wait for daily and weekly highs and lows to get hit, and then you can look for trades there. Look for shorts at resistance, and you can look for longs at support, right? It gets a little more complex than that when you start to have like dynamic support and resistance, which are trend lines. Trend lines are dynamic. They move with the price action. They're developed over time. They're not just stagnant. So those, they kind of like add a little bit of like flavor to it. So if you're doing just highs and lows, that's fine. But then you can throw trend lines in there, and they kind of give you like a breaking point. Like if you're pushing up against resistance and you're unable to break resistance and you start to roll over, the trend's going to be your early sign of a rollover. So there's just tools to kind of help you in your trading. But honestly, like end of the day, you should just be trading supports and resistances. You shouldn't be taking trades in the middle of a range. That's the best way to put it. Like if you're in the middle of a range, most trading strategies have no business taking trades there. You're better off just waiting for those higher time frame supports and resistances. So yeah, honestly, you can build a strategy around that, and literally that'd be your strategy. And I know plenty of people that do very well with just that. Everything else is just extra. You want to know if you should sell gold right now or sleep? Look, I'll give you my analysis on gold. If you lose this trend, depends where you got in. Where'd you get in on gold? Now, before I even talk about this macro trend, where'd you get in? Because if you got in like low 4,000s, mid 4,000s, and yeah, this trend's the area you want to break. If this trend breaks on my 4 hour, see the 4 hour trend, you got one touch, kind of 2, 3, 4, and you got like your fourth one. So 50, 65. Yeah, I probably would close out if it starts to lose. So here's where I would close out. If you lose the low that we're at right now, so like this low right here, that's probably where I would get out of the trade. So you can see we're trying to form a little bit of support here with the wicks. So if you lose this low around 50, 60, you're going to be in the red anyway. The most likely scenario is if we lose this wick, we're probably coming down to grab this wick around 50, 51, right? 50, 50, and potentially retest this trend. Do you want to be in the trade if you lose this and run all the way down here? Probably not. So that's probably where I would say get out. Otherwise, stay in it. But if you're looking to take profits, where I'm going to take profits on this trade, because I am long, by the way. I'm long from like down here from earlier today. Where I'm looking to take profits is probably up here. I'm looking for a retest up here. I think price is making its way up to this 5,100. It could break higher. 100% could break higher, but I don't care. I just want to take profits. So if you're looking for a TP zone, this is a great place to, if you get up here by tonight, great place to take profits. If you lose this low we talked about, this little wick, I'd probably get out of the trade and look for a trade lower. Doesn't mean it can't go up, but I don't think you want to ride it down potentially like a 0.5%. I don't know what your leverage is, but if you're using leverage, but that's still that's a big move for most gold traders. So a quick drop, but over. Yeah, I know, man. I thought it was gonna do a quick drop too. You just gotta wait, man. You gotta wait. Wait till it gets this high, or wait for it to lose that low. I would have a stop loss in though, because this shit's volatile, very volatile at the moment. So maybe have a stop loss in. Monitor this wick right here, and it could break that wick right now, but it's trying to hold. I think that wick's right where VWAP's at too. VWAP's a little lower. So we'll see. We'll see what happens. But right now the trend's up. I wouldn't fade it too much. Trend is up. We had an inverse head and shoulders right here, right? Shoulder, head, right shoulder. The measured move of this move for gold. And I know I'm on the 1 minute. I'm just trying to give you context on the inverse head and shoulders. The measured move takes you pretty much back up to the all-time high. So I'm expecting that to play out, whether it messes around a little bit before it gets up there. But I think, you know, you have a cutoff level always. And there's probably an ass ton of liquidity up here. Probably a lot. I don't know. I traded a liquidity grab on an Asia session on Bitcoin this morning. Well, where'd you trade it at? Let's talk about it. I can tell you if it was a good trade or not. So this was a liquidity grab this morning from Asia. We grabbed the Asia low. Right? This was Asia from last night on Bitcoin, and we took the low. So that's a great entry if you got that sweep, because that means you're positive right now. You're in the green. Yeah, I mean, Bitcoin's just climbing up. Now, the one thing I want to point out for Bitcoin, right? I'm going to go to the CME chart. I want you guys to see this on CME. I know I talk about gaps a lot, but I swear to God, they make sense. Look at the gap we have. We haven't filled this gap on Bitcoin. So if you're long right now, 5-minute time frame, yeah, I believe it. That's usually where I take my scalps too. See how we haven't filled this gap? I think we're coming up to fill this gap at minimum at some point. Does it happen tonight? Does it happen tomorrow? I don't know. But I feel like they're not going to leave this behind before they run it down further, if they were going to run it down further. So I think at some point, BTC will fill this CME gap up to around 89.3, 89.4 is kind of where it's calculated. So I think at some point it gets up there. I don't know how it gets up there. It could mess around a lot more. It could chop around. It could just do one of those, eventually get up there and then roll over. We won't know until it gets there, but it's an area that I think price kind of has a target, and I think traders have a target. So I would watch that level. When you get up to 89.3, 89.4, I think you have to get defensive, right? So if you're long from the lows, you got to trend from the lows, right? So here's your money line. You start losing this money line, that's probably your sign to get out, right? You start cracking that, you break down. It's your sign to get out of the trade, take the win. Don't run it all the way back down to your break even. Above this, bullish. Below this trend, you're lower time frame bearish. That's all. It doesn't mean higher time frame, but yeah, I mean, that's a great saw a new theory today. You want to hear it? Sure, I'm listening, Marcos. Hit me with it. Gold and beef cow prices follow each other. Currently, cattle go for 4 to 5K each is now gold. What's beef? Was it just beef? It's not beef, is it? Cattle? Maybe it is. Nah, that can't be it. What's the ticker for cattle? Cattle live. Okay, is it this one? Nah, that ain't it. I'm on the wrong thing. This can't be it, is it? Do you have a ticker for it? I kind of want to see what you're talking about. No, that's per pound. Okay. So where do we find the one you're talking about? Per cow? How do I find per cow? Let me know if you got a ticker. I'll wait. We'll look at something else until then, but that's kind of funny. Live cattle. So you said they're sitting around 5,000 per cow. So it's like 1 ounce of gold is what a cow costs these days. That's crazy. That's insane to me. Gold's been killing it though. If you've been in gold, you've been making some good money this year. I think gold and silver have outperformed all of crypto, including the altcoins. Theory is because even back in Roman times, a gold coin was used to buy one cattle. That's pretty cool, man. That's cool stuff right there. I didn't know that. Makes sense, all right? Did you know if you go all the way back to the first traded thing, which was like tulips, tulip mania, like fucking, I forget how many years ago it is. Here in Texas, I look at cattle prices. I believe it, dude. That like you can actually see the same emotions, the same greed and fear in the markets, even back then before we had like candlestick charts and actual like means to just trade from your computer like we do today, the ease of trading. It's crazy. Is it going up or down? It's really accurate right now. I mean, gold's kind of like chopping around, but I think gold either puts a lower high in or it goes attacks this high again. My guess is it's probably going to attack this high, but the volume right now is saying that it could just chop around for a little bit, consolidate. I want to see 50,500, 5,050 hold. If we can hold that, then I think we're going up. We're starting to like break down a little bit though. Remember that wick I told you about down here? I was like, if you start to lose that, you're probably going to come down and fill this wick. That's starting to look like a possibility on gold. Could just be a short-term pullback, but let me see what my indicators say. I mean, 15-minute looks like it could pull back. Hourly hasn't rolled over yet, but it's starting. The VWAP's starting to roll. It's tricky, man. Gold's tricky right now. I wouldn't be too quick to try to long or short it. It could get you both directions. Yeah, 100%. What you're saying, liquidity does lie around session highs and lows. One of the things we do, and this is free information. It's not like me giving out fucking alpha or anything like that. One of the things we do every morning is an hour before the market, we talk about our levels, right? So Ben will mark out all his levels. You know, if I have anything, if Dunk has anything, if anybody in the group that's just trading with us has anything, we talk about levels. One of the first things we do is we do this. I'm going to show you right now. I'm going to go to our fresh chart and show you. So we'll go on the BTC, right? And get rid of all the indicators. And what we'll do is you can do it this way, or you can do it just by actually looking at the times. So go to like the hourly, right? I have an indicator. It is called Sessions by Luxalgo. What this does is it will show you each session. So you see how my chart's broken down in these little squares? Tokyo high, Tokyo low. That's Asia. London high, London low. That's London. New York high, New York low. We will mark out all the levels of the previous session. So like, let's say we're trading Tokyo right now. We're just trading it, right? We want to know New York high is right here. We'll mark that off. This is literally how we trade. Because we know that there's major liquidity. New York low right there. Major liquidity. And you mark off the sessions, right? And you can do this every single day. And I can almost guarantee you will get a reaction at some point on these sessions. New York has a habit of sweeping Asia, and it has a habit of sweeping London. It just does it almost every day. They usually go for the liquidity there. At some point, they're going to go for the liquidity. So it's kind of a good thing to know. So there's always liquidity that lies there, because that's where the session lows are at. So that's where like people put their stop losses that were trading London or Asia or New York earlier in the day. They'll put their stop losses there, and that's where market makers in whales want to do transactions. So they'll push price down there to get the volume, to get those trigger those stop losses so they can get their positions. That's how they get in. I'm getting crushed right now. I was trying to take a trade, but it didn't work out. My limit order never got hit. use ICT kill zones, so similar to, yeah, I know a lot. You can, dude, if it works, it works. I mean, I've heard of ICT kill zones. And they're just levels, and they're just names for levels. They're probably the same thing where I'm trading and you're trading. We just have different names for them. End of the day, and that's all. That's all the trading really is. It's just a lot of the time, I kind of make fun of a lot of these. You'll see these courses people sell, right, and they'll like make these names up for these levels and these strategies, and then like you'll look at it as a trader who's been trading for a while, like that's literally what I do or what I've seen somebody do, and they just named it something different. So that's like trading's just like rebranding a bunch of stuff that's the same fundamentals. So Marcos, are you a day trader? So I'll tell you my strategy for day trading. I use the 1 hour to mark my levels, right? The 1 hour is my battlefield, end of the day, right? So I plan my attack on my 1 hour battlefield. I will use the 15-minute for entries on my scalps. So like it has to line up with the 1 hour, and then I'll go down to the 15-minute for my entry. That's how I day trade. So find some higher time frames, because you want higher time frame levels, not just 5 and 15 or the 1 and the 5. Find some higher time frames to plot out your strategies, plot out your major levels, and then zoom into the lower time frames. You'll have more success that way. What type of trading do? I do swing trade occasionally on like the 4 hour or the daily. Most of my trading's day trading. I do, like I said, 1 hour trading, but I use the 15-minute to basically catch my entry, to mark my, to get in my trade. So I'm like a combination of like a swing trader and a day trader. I do prefer swing trading. It's just less stress. Yeah, I can plot it out on the hourly. So look. So if we were looking for some trades here, right? So I'm on the hourly. I built my trend on BTC. I have a high here that we haven't tapped. So untapped liquidity on the hourly, around 88.9. And we have this level up here, which we talked about before, which was the CME gap around 89.4. Those are my two levels to the upside on the hourly. My levels to the downside are all the way down here. I already have them marked out. So you have your weekend low, which is it's also shown on the higher time frame, but you can see it on the hourly. You have this 618 Fibonacci pull, which is also lining up with this wick low, and then you have this 786. So there's like my hourly levels. I have to go to the 4 hours so you can see it. So I'll mark out my levels, and then what I'll do is I'll go to the 15, monitor price. So for me to go short, we're pushing into resistance, right? So I want to see one of two things, like two things to happen. I either want to see price push into this, fail to break back out. SFP is what I have to call it, swing failure pattern, and then roll over trend, signaling for me to go into a short. Or I want to see a rollover before that happens, and then a back test to take my short. So that's kind of the way that's what I would be looking for on the 15, something like that, or something like that. That's if I was going for a short. So I'm looking for plays like that into a 1 hour level, 1 hour trend. You get what I'm saying? You can also look for the same play up here on this 89. Maybe this level doesn't hold. Maybe we just keep going up, and then we wick up here, and then we close back under there, and then we roll over. So that's how I mark out my levels, and I wait for the reaction. I wait for price to get there, and I'll watch it on the 15 to see how price reacts when it get there. A lot of times you'll see divergences form. You'll start to see wicks and all that kind of stuff, market structure on the 15 before you see it on the hourly, so you can get in earlier than just waiting, I really want to take this gold long. It's being a pain in the ass, though. It's very, very volatile right now. But I have a feeling it's going to pop up soon. I don't know. We'll see. It does look like it wants to pop. Just do I have the patience to wait for it? What else you guys want to look at? So I started futures. Feels like a mix between stocks and options. It is. Futures is just it's just a derivative. That's all. It's like me saying, hey, having my own trading pool, and you can trade a derivative of like gold or silver or Bitcoin. It's on a futures market. That's really what that is at the end of the day. So my 1590 prediction is accurate. It could be, man. You could get back up there. There's a chance. We haven't lost this wick low yet. And actually, we did lose that wick at 65, and now we took it. So if I was trading this, let's say I was long from, well, I probably would have had a stop loss here, to be 100% honest with you. I would have had a stop loss if I was like in from here. I probably would have had a stop just under it. But I guess you could just watch this for now. Got a little bit of a wedge forming. It's either going to break up or break down, right? We'll see. We're trying to gain support off this right here. See this high right here on gold? That's where we're trying to find support on. So I guess that would really be my line in the sand if to stop looking for longs for the time being, or cut my long. But for now, it looks like it wants to try to push. You go down to the 1 minute, and I don't usually do this often, but you can see like shoulder, head, right shoulder. So it's like forming an inverse head and shoulder on the 1 minute. It's kind of like my sign. Yeah, I do. So myself, Ben, and Nick, we're all full-time. There's a few other guys that do this like full-time in the Discord. They're not as open about it as we are. I do have other means of income, so it's like trading's not my only mean of income. I have like some businesses I run. So some of it's passive, some of it I do a little bit of oversight, but I don't work a 9 to 5. Like I don't clock in for anybody, if that's what you're asking. Ben's 100% trader, and Nick's actually 100% trader at this point. So neither one of them work a 9 to 5. Like trading is their job. I'm not sure if they have like other income or anything like that, but like they make most of their bread and butter is trading. I'm getting there to the point where I'll probably be able to like live my life and afford everything just off trading, but I'm just taking my time. I have the least amount of time out of the three of us that run the group. I think I have about 5 years in. They both have about a decade each. So they've been doing this a little longer than me. So you can imagine they've had more time to grow their wealth, get themselves to a position where they can, like Ben only trades Monday through Fridays. Like I'm gonna tell you what the dream is. The dream is to be able to do what he does. He wakes up 8:30 in the morning. For him, it's like freaking 5:30, 6:30 in the morning because he lives in Minnesota. He will do an hour prep for the market where he marks off his levels with the group, and he'll probably be done by lunch every day. If he hasn't taken a trade before lunch, he's usually done. He trades 5 days a week, Monday through Friday. Doesn't even look at a chart on the weekends. He'll do like group stuff, accountability things. But he trades Monday through Friday, a couple hours a day, and then he's done. If he takes a trade, he takes it, and he's done. And like that's the dream, to have the rest of your day not to worry about shit. What got me into this? Getting burnt in the market, dude. Just like everybody else. I got into crypto in 2021, at the top of the bull market. Got my fucking ass kicked, like absolutely crushed. And I was like, I know nothing about the markets, and I need to learn. I'm one of those people that like, if I let's say something catches me off guard, and I lose at something, I lose a game, or I get beat at something that I'm new to, I'm immediately intrigued, especially if I see a way I can beat it. When I saw trading and I'm like, there's a way to do this and I can figure it out. And that was like, it just sparked the interest, lit the fire, and I was just like, it was pretty much just searching out knowledge at this point. If you're hoping to make it a full-time thing. So Marcos, let me tell you the best thing you can do. And I'm not trying to say this. It doesn't have to be our group. It can be somebody else's group. Join a trading group. The benefits. And I'm not even going to say our group. Just find a group of value. I can tell you our group is great. We have tons of free stuff that you can, and tons of people with experience you can talk to. The reason joining a group is so important, it will save you so much fucking time. Like, for me, I learned trading by myself. It took me 2 years to find a strategy that actually worked, to weed through all the bullshit, learn all the mistakes. I had to do that shit all on my own. I had to blow the accounts. I had to fucking feel the pain of losing all my money in a trade that I fucking absolutely just went like bonkers on. Like I fucking put all my money into a trade, realized that's not what you're supposed to do, had to find out the hard way. The beauty of joining a group is you have people who've made those mistakes who could tell you, yo, this doesn't work, this works, this doesn't, they can kind of like weed out all the bullshit for you. And that's the money right there. Like that's where the alpha comes, is being able to like expedite your journey. Because eventually you will probably get it. It's just a matter of how long and can you withstand the time that it takes you. You join a group, you're probably going to expedite that time. I can almost guarantee it, especially if you put the time in and you're consistent with the group and you pay attention. Just be a fly on the wall for a bit. You'll learn so much. Free only so far. I joined a few, it's helping a bit, but none are super helpful. It just helps with some socializing. You're probably not in the right groups, man. I was in a bunch of trading groups before I joined Tactical Edge. I'll give you guys a little bit of rundown on what I used to actually be part of Crypto Banter. I was a mentor at Crypto Banter. I joined in 2023, just after I had learned how to trade, got a little profitable. I joined, I was a moderator for like 3 weeks. They were like, you're too good to be a moderator. You know way too much about trading. They made me a mentor right off the rip. So I was teaching people in sniper school, like Sheldon Sniper School, if you guys ever heard of Crypto Banter. So I was teaching people. And this is right before they started to monetize everything. Like they had all these like groups coming in, like these paid groups that you'd have to join, like the chart hackers and all these different paid whale group and all this stupid shit, right? And I got out. Why? Because yes, there was a bunch of traders there, but I wasn't learning anything. I was more teaching, and I was like, there's got to be more for me to learn. Like there's got to be more so I had to, like, I joined that group. I was in Frankie Candle's group for a while before I even knew how to trade, like the Candle Mafia. I was in Crypto Faces group, Jason Casper's group. And then, look, a lot of them are cool because you'll meet cool people there. You'll learn some things. But none of them really had that same, what I was looking for. They didn't have that same mentality. Like, I am the type of person, like, I need to be surrounded by people who take it as serious as I do. When I joined Tactical Edge, that's when I kind of found people that were like, okay, these are real traders, people that literally take this shit serious because that's what they do for a living. So you just got to find the group that meshes with you. For me, that was Tactical Edge. I needed a serious group that was serious about trading. So I got worst case scenario, dude, check us out. If you don't like it, if it's not for you, dude, it's nothing. It's free. You can leave. You can stay in the group and just not really give a shit. Just be in part of the Discord. So my favorite group just changed the pay, and they didn't even do that. What's your favorite group, Marcos? Trading should never be considered a hobby. Because when you're playing with real money, real emotions, and you can actually literally fucking destroy your life, like, it shouldn't be treated as a hobby. It should be treated as a... The only time trading should be a hobby is if you, like, treat it like gambling. Like, you use money you're willing to lose, and you just enjoy the thrill of it. Then, yeah, that's a hobby. Or if you just, like, are the type of person who really enjoy the charts, and you don't really want to put money out there. We have some guys in the group like that. They just like the charts. They like looking at the markets. They just enjoy this stuff. For them, it's a hobby because they're not trying to make money on it. The goal should be to become... The goal should be to just become obsessed with it, and then learn to then it starts to pay you. You know what I mean? Your obsession starts to become lucrative. Like that's like the goal. If it starts as a hobby, that's great. If it ends as a hobby, that's fine. If you just know if you're a hobbyist, like if you're here because you enjoy it and you're not really here to take it super serious, then that's fine. Just know it. Know that up front. Don't go in saying you want to be a real trader and then you treat it like a hobby, because then you're just gonna get wrecked. Found out last week, grew my account from 3K. I only have 200 left because I chased. Dude, that'll happen. You know, it's funny. You can have a banger system. You can be a good trader, but if you lack discipline, or let's say you falter on your discipline, it'll fuck you over, dude. You go on tilt one time and you don't know how to turn it off, or realize you're on tilt, you'll blow your whole account. I've done it. I know it'll happen. You kind of want it to feel like a real job, so I go to college for it. What do you think? Trading? All right, so there is no college for trading. That's the thing. That's the hard part about trading. Trading is one of those things that it's like just think about it like this. It's like a trade passed down from like person to person. It's like the best thing you can get that will like kind of mimic a college is you getting a mentor, joining a group and getting a mentor. We have like boot camps that we have in our on our website that'll, like, if you're new to trading, it'll, like, there's a series of videos and tasks we'll tell you to do that'll kind of get you up to speed. But I think you really need to like understand that, like, there's no like college for trading. So like if you want to really take it to the next level, you need to surround yourself with people who are doing it and who have the experience, more experience than you. That's the best way to succeed. Find people who, like, they don't have to necessarily be your mentor, but they can serve as a mentor when needed. So Oklo, we talked about this one yesterday. Look, we had our range high around 113. We swept it, and we had the range low around 71. We're looking for a higher low to be formed in this golden pocket. This is your 618 Fibonacci pull from the low to the high. It's also the 786 at the low. I draw a box and I label a GP. If you ever see a GP with a gold box, that's a golden pocket. It's a 618, 786 foot pull. If it's going to put a higher low in, it's going to probably do it here. So I'm looking for this to hold and then eventually some market structure to flip back up and then maybe start attacking a little higher. If it's going to put a higher low. If it just fails this, then it's coming back down to this low here to attack this 71. If it loses 71, I mean, we just got to be realistic here. That's the bottom of the range. What's next? It comes down to 65, maybe down to 60. These little lows, see this area right here, this liquidity, that's what we could attack if we lost this low, because that's where all the liquidity stacked. So 71 is important, but if you want to remain bullish on this one, ideally you don't want to lose the low we just put in now, around 80. So watch this golden pocket, see what happens. There's not really a clean trend to go off of right here, but you have something you can kind of monitor. You got 2 touches there. So you could just watch this little trend, watch this golden pocket and see what happens there. To the upside, look, if you can hold this level, break this trend, right? Boom. You expect to come back up to the range high around 113, attack that. If you can break that 113 and break out of this range here, right? This is a lot to happen, but then you start attacking highs around 150. That's your next level. And then if you can break 150, you get up to like 200. So you just break it level to level. You don't need any programs. Ghost, if you want to if you want to learn trading, this is what I'm going to tell you to do. Check out our Discord. First, sign up for the website, tacticaledgetraders.com. If you're watching this on TikTok, the link's right in the bio. Check out our website, join up, sign up for the portals. There's a bunch of free educational content there. It will, I promise you, it will steer you in the right direction, and it'll kind of give you some clarity on what you need to focus on, right? If you want to go a step further than that, join our Discord. You can do that right from there's a link at the top of our website, and you can join there. It's free to join. There is tons of educational content that can lead you, whatever type of trader you want to be. Do you want to trade sweeps? Do you want to trade bounces? Do you want to trade breakouts? We have all that kind of stuff. We can show you how to do all that, and you can actually ask people who trade those styles and like learn from them if you want. So, and if you're looking for reading material, looking for educational material, we post that kind of stuff in the Discord. Like, I know one of my favorite. Sorry about that. I know one of my favorite books is Technical Analysis of the Financial Markets. It's just like literally like the bread and butter like textbook. It's like when you talk about textbook TA, that's like the textbook I'm talking about. It's called. You have that book? It's great, dude. It's an amazing book. It teaches you almost everything you need to know to kind of get your feet wet. So if you're looking for a book, that's what you're looking for. I'm gonna type it in here. I just typed it in under Tactical Edge Trading, Technical Analysis of the Financial Markets. It is long, but it breaks down a bunch of different stuff. It breaks down trends. It breaks down candlestick formations. It pretty much gets all the fundamentals. It teaches you how to even look at a chart. Like what I'm talking about right now, if you don't understand candlesticks, you don't understand support and resistances, you don't understand Fibonacci's, you don't understand how trends work, golden pockets, that book will pretty much get you up to speed on that. If you're a self-learner. If you're not a self-learner and you need direction, then you can always join the Discord and we can teach you there. Yeah, I would definitely recommend it. It sits on my bookshelf, bro. It doesn't go anywhere. Literally on my bookshelf. It's one of my favorite books. Trading Psychology, Psychology of Money is another good book. Trading Psychology 2.0 by Brett Steinbacher, I think it is. There is The Psychology of Money, which is a really good one that'll teach you how to think about money. J. John Murphy, that's the technical analysis one. You're 100% right. So John J. Murphy, yep, that's the book. It's great. It's a great read, man. And you can get it for like $15 on Amazon. It's not even, you probably get it for free, to be honest. You might be able to find like a PDF version online. Psychology of Money is good. We do have a book list. I'm not even joking, dude. Join the Discord. We have a book list. We have a whole channel for books. Ben talks about a bunch of books he's read. I know one of the ones you want to hear a fun book? This is a good one. You guys know who Jesse Livermore is? Check out, what's the name of the book? It's, what the hell? I gotta look this up real quick. It's gonna fucking kill me. It is, god damn it. There's a book on Jesse Livermore's life, basically. It's Reminiscence of a Stock Operator. It's a fictional book based on Jesse Livermore, and it talks about like how he made his up and his down. Basically, I don't know if you know it, but he died basically broke. I think he committed suicide. But he still goes down as one of the best traders ever. There is a Warren Buffett book I'm actually reading right now. I forget what it's called. It's on my Audible list. I was reading about how Warren's basically got his, like what he looks for in stocks, how he picks his stocks, how he built his portfolio, how he started his career. Yeah, dude. Yeah, Warren Buffett's crazy, but Jesse Livermore, man, he's iconic, man. It's a good fictional book if you want to understand like what trading's like, and he's got like a lot of stories in there that you can really like enjoy. It's an easier read than reading like a technical analysis book. Technical analysis is not really like fun. It's never a good read. Oh, somebody asked for a chart. So Oklo, we're still looking at this. So look, yeah, just watching for this level here, and I'm watching for this trend. I mean, if we keep going down, then I guess 71 is our support. But if we can hold this $80, man, there's a chance. There's a chance if this breaks trend, this could run back up. So this is like the last bit of hope here for this thing. You can see it's like right at the bottom of the wedge too, right? If you just kind of draw this line back, we're getting tight. So it's going to either break up or it's going to break down from here. It's able to become oversaturated. No, not yet. Why? I want you to think about the hardest professions in the world. Like everybody wants to do it, but no one's willing to put the work in. Trading is amongst those. If everybody could become a doctor, they would do it, but not everybody can. Not everybody's willing to put the work in. Not everyone has the discipline. Not everybody has the brain for that kind of stuff. Now, you don't have to be a genius to be a trader, but you need to be disciplined, you need to be dedicated, and you got to be okay with taking an L. And you also have to be able to put your ego aside. I'll tell you one thing about trading. It's not about being the smartest. It's about being the most disciplined and the most consistent. Being smart means nothing. Anybody can, if I give you, look, we've actually have it's not even an experiment, like it's true. We have a trader named Bobby. He's doing direct mentorship under Ben. Ben's like our most successful trader in the group. He runs the group. I think he created the group, him and Donkey. Ben decided, he's like, I'm going to do a mentorship with this guy named Bobby. Bobby knew nothing about trading. Bobby didn't even know what TradingView was. He didn't know what a candlestick was. He didn't know what he was looking at. In 14 weeks, it was a 14 or 15 weeks, Bobby's profitable. Bobby has a system. Bobby has rules. Bobby went from paper trading from 8 weeks of paper trading to within his third month, he's trading with real money. He's actually winning more money than he's losing. There's still things Bobby doesn't know. He's not the smartest when it comes to trading because he hasn't been around for years. He's only been around for a few months. So there's so much knowledge out there, but he has a system. He has discipline because Bobby's a bodybuilder, so he's built discipline through his life. He understands what it takes to be disciplined and to be successful in anything. And he just has a set of rules, and he was taught the right information, and he's doing well. He's doing great. And there's a lot of people that are able to do that. But then you get the guys that come in that are like super smart, like they fucking super like successful in life. They have businesses, you know, they've made it to the top of whatever like job like they were trying to achieve. They're at the top of that. Like they're engineers, they're at the top. You know, we got like guys who do that, like that kind of stuff. The problem is, like, the smarter you are, the more you think you know, and it's hard for you to listen to others because you think you know better. And that's a fucking downfall. I can tell you right now. You have to be able to put your ego aside if you want to be a trader. When should you go from paper to funded? Once you have a strategy that works. If you've gotten from paper, so like if your strategy works on paper, right? You've been trading on paper for like 6 weeks, and you've consistently made money and consistently been able to execute your strategy flawlessly, then you should start using money. You need to have at least my like this is what I say. 6 weeks to about 3 months of paper trading will do you good before you actually trade with real money. And then once you start trading with real money, you should only trade with a little bit. Just enough so it stings if you lose, but you're not gonna freak out if any of a candle goes against you. That's the last thing you want, is to have like all this financial pressure on you. So like, if, you know, if $100 after you've done paper trading, if $100 is like, if $100 is not a lot of money, then trade with that. If $100 is a lot of money, trade with $50. You know what I mean? Like, I don't know what your financial situation is. For me, it was like, you know, I'm not going to trade with my paycheck for the whole week. Like, if I make fucking $1,000 in a week, I'm not using all $1,000 in the trade. I'll maybe use $50 or $100 until I learn with money. Because I will tell you, when you trade with money, emotions come into a play. And when emotions come into play, it makes it way different than paper trading. Everybody's good paper trading until they put real money on the line. So that's why you need to like get your strategy down, get familiarity with whatever exchange or brokerage you're using, and then once you've got that locked down, then switch to money. Gold on the screen, you think it broke a structure? I'll check out gold real quick. Let me look at Impala real quick. Someone asked me if it was Impala Platinum holding. Damn, dude, this thing's ripping. Fuck. I gotta go to the monthly. All right, so look, we're above a major level. I'm gonna look at gold after this too, because I am long on gold. We're above a major level. So we broke a monthly, weekly high. The next major high is not to up here. It's crazy, right? On the monthly. Now we go to the weekly. We got some levels. So we're approaching a level right now around 24 on the weekly. This could serve as temporary support or maybe resistance. And then I don't think we get another level until we get up here. So about 31. So let's go to the daily and see what's happening. So those are our levels to the upside. We got some gaps to the downside. So we want to hold this 21. If we start to break back into this 21, below 21, we flirt with coming back down and retesting some of the levels below. Now, one of the levels that stand out to me now, this is a far drop, but it would be around $14 would be a major level, because you see how we had resistance there, and then once we broke out, we just ran up. So this would be a major level if we did start to lose this, but we could also find some support right around here too. So like, I think the major support below us is $14 if we lose 21.36, and the bigger resistance above us is around this 31. This is like, so if we can stay up here, chop around a little bit, you might get a move up here. If you start to lose this level, you could get a move back down there. So this thing's pretty volatile, so I would just monitor and see what it does. It doesn't look bad right now on the higher time frames. Lower time frames look good too. You got a little bit of a money line starting to form here on the daily, right? So that could serve as temporary support if we do pull back, right? Let's say we do break down. That could serve as support. Now, does that line up with anything? Let me check on the weekly. It does. Look. So remember that high I was talking about here? Right? Now I'll go back to my daily. Look at that. So if we do lose that level around 31 or 21.36, that trend and that previous high around 19 could serve as support. So we could look there first, and if we lose the trend, then we start talking about a bigger move down to 14. So those are the levels I'd watch on this the Impala Platinum Holdings. In the meantime, I mean, look, dude, look at the 4-hour. I mean, look at all the CME gaps you left behind. You got to be mindful of this stuff, especially after I have big pumps. Like, they could come back for this. And it's this gap right here, right? I'm just trying to build an idea. I'm not saying this is going to happen. But, like, these gaps, when they line up with these levels and these trends, like, they usually tend to get hit. You got a gap down here. All right? So just mark these out. And maybe if price starts to make their way there, you make their way towards it, you can kind of get an early idea of, like, hey, that might be the target. I mean, that's pretty much what I do, end of the day. So, look, I mean, we got that. Where's my trend? Did I erase my trend? I did. Where's that trend I just had? There it is. So look at that. So we got a little bit of a trend right there. Runs us into two CME gaps below us. CME gap at 20 bucks down to about 19, and then we have another one around 18 down to about 17. Now, I would say that this is probably going to be the bigger support. We really want to try to hold this $19 to $20 area. If we drop below that, there is a smaller CME gap we could fill right here. But then it runs us back into the possibility that if we're filling this gap, we may come down and just tap this trend, maybe even tap this gap here. Yeah, I know. I don't really do the hotkeys too much, man. I just keep it simple. I try to keep it simple and just pick my lines, but you're probably right. You probably should learn all the alts. I'm just being lazy. Where the fuck is gold? Did I just get rid of gold? I did. But yeah, it's kind of a cursor. Is cursor, is that... Say one, are you asking me for a ticker, or are you telling me, is that like a finished from your last statement? Add a 0 to the end, you can imagine what your profit and loss. Yeah. The audio quality is insane. Talk about a level up. Yeah, man, I got a little mic now. I'm fucking cooking right now. I can't even get this thing to stay straight though. Hold on. Oh, it's unscrewed. There it is. Can you guys hear me now? Yeah, I was just checking my mixer. My mixer wasn't even moving. Yeah, that was weird. When it shifted, it must have loosened the wire. So CRM. I think CRM is going to be the last one I checked, and I'm probably going to jump after this. I've been going for like an hour and a half, 2 hours already. So CRM. Damn, dude. This thing ripped to the downside. Whew. So the first thing I notice when I look at CRM on the higher time frames is this low right here around 2002. Look at that. We lost that trend, right, on the monthly. And we just been kind of trending down, man. Like, as simple as that. Like, lower highs, lower lows, a simple trend to the downside, right? Nothing too crazy. Let me get rid of that last line, actually. So right now we're at support. Technical difficulties. Yeah, Marcos, absolutely. Dude, I'm king of technical difficulties, man. There's always that one guy in the group that always is, shit's always fucking up. That's me. It used to be somebody else, but now it's me. Yeah, it's at support, dude. I wouldn't short this thing. You know what I would do with this? I'd pull a fixed range volume profile from right here and see where it's at. So right now you're below the value area low, but you also swept the low here. So wait to see what happens when it gets back up here. If you were going to look for a short, you're looking for a short either into the value area low or the POC and then the rejection, right? So you're looking for a short in this area here. That's where I would be looking for a short back into the value area. If it gains acceptance back into this, it's probably going to run back up to the value area high. But until it does that, you could look for lower highs or like a rejection to form. So I would say around 236, around 242. That's probably the area I'd be looking for an immediate rejection. So a little pump back up into this area. If it rolls over, starts to show signs of weakness, then you could probably look for a short in that area. You can even go down to your hourly, right? Go down to your hourly, take a trend line from the low, run this trend. Set an alert on that trend. When that trend breaks, that's your early sign that this thing may be rolling over. Now, if it just does this, right, into this resistance and then starts to do a little rollover, that's even better because now you're at resistance and you get the trend confirmation. So that's probably where I would look for the short. And look, if it breaks back into this, you're not looking for a short. Wait for it to break back above POC, and then you might actually be able to catch the long back up to here. Or you could look for the short up here. If, let's say it doesn't short there, it could come back up here and just run the range again, you know? But I would say with this high right here, see I have like a little triple top on the hourly. That's a significant high, man. It's going to be hard to break. So I think any lower highs between that POC and that value area low would be fucking juicy for a short. But yeah, it's kind of what I'm seeing. Anyways, guys, look, I'm going to go through my show one more time. If you're not following us on TikTok, or if you're watching on YouTube and you're not following, give us a follow. It's not going to hurt. We do lives almost 7 days a week. You can learn something. If you're not part of our Discord or on our website, check us out. TacticalEdgeTraders.com. Free content on there, free educational content. Ben put a lot of hours into those videos. I'm telling you, it's alpha. He could have sold the course. We had that talk where he's like, "Yo, should we sell it?" He's like, "Nah, I want to make it free because I don't want to gatekeep education." And that was the big talk we had. And honestly, he could sell it as a course because some of that information is like people pay for it at the end of the day. And if you want to join a community that's like-minded, that are about trading, full-time traders, people that do this for a living, that take this serious, yeah, check out our Discord. Like I said, that's free to join as well. VPN Ben, yeah, VPN Ben. Dude, his stuff is fucking good, man. Like MVP. Yeah, Ben's the man, dude. Ben is the man. I hope he's not listening. I don't want him to hear me ever compliment him. Like me and him have that kind of relationship where we talk shit to each other. Can't give him compliments. I can give you a Bitcoin update before I go. All right, so look. This is what we're watching on Bitcoin. This is short-term time frame shit. We bounced off a 618 earlier. This is a 618 fib pull from like all the way at the bottom, right? So anyway, you can pull from here, pull to the high. You can see what we bounced off of. That was a 618 fib pull. And we're running a money line since we've bounced. So this money line is your support. You start to lose this money line, you're coming down to probably retest the low at 87. And if you lose that, you're coming back down to take the weekend low at 86. This is the low from the weekend. They've never taken this liquidity. This is all left behind from the weekend. If they were going to roll over, that would probably be my target. Now, look, we are pushing into an hourly high at around 88,900. We've hit once, twice, 3 times already. If we break this level, the only real level above us is this high around 89,400. That's the CME gap. That was where the weekend we closed on Friday, and we opened up all the way down here. We filled the majority of that gap, and I can show you on the BTC CME what I mean. You see the gap right there? That's where we're sitting. So we have a gap up to about 29,300, 29,400. That would be my big target. A lot of times when we fill gaps, that's usually sometimes what they do, and then they run it back down. So we're looking to see what happens when the gap gets filled. I think it will get filled at some point. It's just a matter of, does it happen tonight, and what happens when we get up there. But yeah, those are the levels I'm watching to the upside and to the downside, really. We lose this trend, I'm looking for a short back down to at least 87. I think that would be a nice little short. And if we get back up to this gap, which also lines up with this trend up here, right? So we got this higher time frame trend. Excuse all my levels. I got a lot of levels drawn, but you have this trend coming down. We also have the gap. So what's to say we don't push up into the gap, into the trend, and then we see what happens. If we start to reject there, that would be a monster short. If we break this and start to flip, could be the start of a beautiful long, maybe to come back up and reclaim some of these higher levels. The one level I'm watching is this New York high. Sorry about that. Is this New York high? If we do manage to break that CME gap, it's the New York high around 91,100. And then there's some levels up a little bit higher, but I think really where it gets interesting is up here. Like, you got to get back above 98. Otherwise, this is all null and void. Like, all this chopping around we've been doing has been for nothing. Because end of the day, what's Bitcoin been doing? I'm just going to kind of give you some context before I go. I could see it going up. I'm like 50-50 right now. I could see it going up or down. There's reasons for both. I am long at the moment, but not on Bitcoin, but I'm long in general in the markets just because I think they've been bleeding out. But look, you have to be mindful that, look, this is what Bitcoin's done. We were in a flag, little bear flag, right? And we broke down. We've broken down from that bear flag. So it needs to reclaim. If it doesn't reclaim like this, like 91 level, that's why I said it's a big level. It's this high right here. That would put us back into the trend. And that could be the start of a potential pushback up to 98. Now, if we can't do that, then I'm expecting a rollover here. I'm expecting this to come up, fail, and then boom, bigger drop. I mean, I hate to say it, but that's kind of the scenario we're in right now with Bitcoin. It's got to make a decision here. If you want to look at it just from like a range standpoint, I mean, we're above the value area low, right? Let me just get rid of some of these trend lines, kind of just talk about the volume profile here. So we're above the value area low and we're above POC. So there is a chance we could make our way back up to 92, right? But we need to hold these lows. We can't start losing this low around 86.3. We definitely don't want to lose the POC around 87.6. We start losing these levels, then we open up the floodgates to potentially start taking this 84.5. And this 84.5 actually makes a lot of sense too. So like if we lost the 618, let me just show you on the fibs. If you pull a fib right there, we're bouncing right this moment off the 618, right? There's your 618. And that's what you're trying to catch support off. You see how we tapped it, we came down, swept it, and now we're trying to bounce. If we lose this level, the next level is this 84.380 or 390. It also lines up with that low we talked about right there. So that would be my next level to the downside, major level. So, yeah. Over 91, we take MSTR calls. Got it. Yeah. I mean, look, I think we're probably going to come down before we get another bull run too. If I'm just looking at the macro, right? I'll give you a little bit of context from this will be the last thing, and then I'm going to jump. So let's just look at the 50-week moving average. What did we do last cycle? We put in a slightly higher high with bearish divergence. You can see there's you can see it on Market Cipher right here. There's bearish divergence. We lost the 50-week. We did what? As soon as we lost the 50-week, what did we do? We bear flagged back into it. Look at that. Bear flag. And then we had another major drop. What are we doing right this second? We had high, slightly higher high. What are we doing right now? We're bear flagging into the 50-week. So it's like the same setup. Another last thing. Yeah, no, dude. So many last things. So look, I mean, dude, this literally, like, it just looks just like last year. Maybe that's what happens. Maybe we don't even get that push. Maybe that was the final push and we're just getting ready to break down. So we won't know, but that's kind of what I'm seeing. So I agree with you. I'm on the agreement that this is probably the last push up for the year. And then I think we're going to have a bigger leg down. I think my target takes us down to about look, I can see two areas getting hit if we were going to push down for a bear market. I could see this 72 being a fucking beautiful area, sweep these lows, 70, 72. But I also see this low here, around 50. Why? Because the measured move of the flag would take us down there. If you take the longer flag, right, takes us pretty much down to that level, right? Takes us pretty much down to that, just below 50K. That would be an awesome buying opportunity in my opinion. Now, why this level makes a lot more sense too. What did we do previous bull? We put a high in. Where did our bear market take us? Just right about a back test of that high. So if we were going to do the same thing or something similar, That would take us to about a little just under 70K, just to back test the previous all-time high, just like we did in previous cycles. So that's just kind of my like theory on it. 40 could be, I mean, dude, if we got the 40, I'd buy the shit out of this thing. What's your floor estimate? I'm going to say right now between 50 and 70K. That's probably where I think we find our low, between 50 and 70. Doesn't mean we can't go lower, but I think that's the area I'm going to start looking to DCA. But it's also time-based. If you look at when we bottomed out, Ben went over this really well. It was in October, right? When we bottomed out the previous cycle, I think it was somewhere in like October as well. So basically it's time-based. It's always time-based. It's every like, I think we go through like 364 days of a bear market, right? So if you looked at the bear market here when it started to when we had the low, 357 days, right? Let's do the same thing from where we're at now. So from the high, the exact high, let's go 357 days out. That takes us to almost October. So the end of September, early October. That's probably when I'll be looking for a low. Who knows, dude? Who knows? I don't think they give a shit about crypto, to be honest with you. I don't think they care what crypto does. That's kind of what I've noticed, at least. I don't think our government cares too much. I think it's just the people that own it and the institutions at this point that care. 8K 2 bears ago, then 40K would make sense. I mean, look, I said anywhere from like down to 50K, but like, look, we don't know. Like these bear markets, man, they could run it down even further. No one was really calling for 15K. A lot of people thought that the bear market was going to end at 20K, and then we dipped another 5K below because that was the previous all-time high. And you can see where the buyers came in, right? Buyers came in at 20K, and then they dipped it one more time to shake more people out before they actually start to run it up. So what's to say we don't do that? Maybe we run down all the way to 50K. People buy up, right? And then we run it down a little bit more, and then they flip it, something like that. So like they could definitely sweep it down to like 40K and then fuck everybody over and then run it back up. And they could do the same thing up here at 70K, run it down to maybe 60K, 65K, and then bring it back up. So there's just levels to watch. I think it's going to be more about time. If we're coming into September, October, and I see us sitting around 50K, I'm probably going to start looking to buy. And if we're sitting around 70K, I'm probably going to start buying there. I think it's more of a time thing for me. Good long-term plan for us. Yeah, right. Fucking Trump. To shake more people out, dude. Hell yeah, dude. What is NBIS? Nebius Group. I don't know, man. This one's a little weird. I would watch this trend, but you already lost it. So you're up against resistance. You deviated above it, and you're losing the trend on the daily, right? You can see on the 4-hour. So your high was around like 104, 105, and your low is around at 75, 76. So you lost this trend. You back test it. You failed to get back into it. So I think your next stop is at least 83, 84, and then possibly down to 75 here if this trend continues. Now, how does this get invalidated? Well, you come back up here, you take this high here. You come back up here, break that high, then that's invalidated, the short. That's pretty much it on MBIS. But I think that's it for me tonight, guys. I really do got to go. I got some stuff to do, unfortunately, before I go to bed tonight. But I appreciate everybody coming out. Like I said, if you're not following us, give us a follow. And if you're not in the group, check out our Discord. Check out our website. It's free. It's not going to hurt you. Not going to cost you a penny. But I appreciate you guys. Until the next time, all right? Later, y'all.